You can tell a lot about a business by its revenues. And remember, if you hope to pull out cash from a business, it starts from its revenues. So what do I mean by revenues and revenue trends? Where can you look at a company's revenues? How do you know where a company's revenues come from? I'll go over all these things in this video. I got you. Now, a company's revenues is just the money that it makes from selling things, whether it sells a good or a service. So when you go into Walmart and you buy a loaf of bread, the money that you spent in order to buy that loaf of bread represents revenue for Walmart. When you take your car to the repair shop to get it serviced, the money that you spend there represents revenue for the repair shop. Now, of course, when you go into the stock market, you're looking to buy companies, so you can be part owner of the company or the companies that you choose. And naturally, if you're part owner of a company, you want that company's revenues to grow higher and higher and higher, so that you're part owner of a company that's potentially growing larger and larger and larger. Now, if a company is increasing its revenues and at the same time cutting its expenses, then that means that the earnings and the profit of the company will be growing as well. And you being part owner could potentially put more cash in your pocket as time goes on. And that's the name of the game. But let me give you visual representations of what I mean by revenue trends. Now, this is a company's revenue chart. So on the y-axis, we have the company's revenues from 50 million up to 200 million. And then on the x-axis, we have the years from 2016 to 2020. We just started 2021, so I left it off. Now, let's assume that this is a company that you became part owner of in 2016 and you still owned it in 2020. But back in 2016, they had revenues of 50 million, right? So this is what you want to see. Now, this is a company that has uptrending revenues, meaning that it's selling more, which is a good thing. Because think of this. You bought the company back here in 2016 when the company had revenues of 50 million. And of course, the company had expenses as well. Now, hopefully the company's expenses were less than its revenues so that the company was profitable and you were potentially able to pull out some of that profit and put it in your pocket to spend it how you please or maybe reinvest it. If you need to get a greater grasp on pulling out some of the earnings to pocket some of them, then I covered this concept in my video on dividends. So you can definitely go back and watch that. I'll link it down in the description below. Now, imagine you never sold your ownership in this company and it's now 2021. We're going to assume that over the years, the company has done a great job of cutting its expenses and keeping its expenses in check so that here the earnings are also much greater than they were back here in 2016. And the earnings line might look something like, meaning that here in 2021, you potentially be able to put in much more cash in your pocket from the company's earnings than you were back here in 2016. Just by being part owner over these 5 years. Now, the following 3 charts are what you don't want to see when you're part owner of a business. The downtrending revenues, the stagnant or flat revenues, and potentially the cyclical revenues. Now, this is a company whose sales are declining, meaning that potentially you'd be pulling less cash out of the business as time goes on because earnings here are likely much less than earnings were back here when you first became part owner of the business. This is a company whose sales have been flat for the last 5 years. It could be a mature company, meaning that it's already grown as much as it's going to grow. From here, revenue can go 3 directions. Now, if the company wants to go in this direction, then they'll have to be innovative and creative in gaining new customers and increasing sales. Companies with revenue charts like these are usually the companies that are your cyclicals, meaning that there are times of boom and bust within the business. Now, let me show you what these revenue trends look like in real companies in the stock market. And for that, I'll use Yahoo Finance and another tool that I like to use, Macro Trends. Okay, so for our uptrending example, I've pulled up Apple in both Yahoo Finance and Macro Trends. Now, when it comes to becoming part owner of a business, then you should definitely get in the habit of understanding how the business generates revenues. So you can come on Yahoo Finance and click over to this profile tab, and everyone knows what Apple does, but down here at the bottom when you scroll down, you can see the description. So Apple Inc. designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. Now, from here, you can go over to macro trends so we can see the trend of the revenues over time. So you can type in the company's name right here. I already have it pulled up, but click on this revenue and profit tab, revenue, and then come on down to the charts. And for Apple, this chart goes from 2006 to 2020, but in this top one, you can actually see how the revenues have trended over time. So they've trended upward, right? And down here, you can scroll down to see the table of that same thing, and you can see that in 2005, Apple had revenues of 13.9 billion, and then in 2020, those revenues grew to 274 billion. So that was definitely a good thing for the owners who owned Apple way back here, and if they, continue to own it over the years. So that's our example for an uptrending revenue company. Now for our downtrending example, we're going to look at IBM. Now IBM has some things in the works as far as with quantum computing. So if quantum computing turns out to be commercially successful and IBM is a major player in the field, then it could bode well for the company. But as of right now, we're going to use IBM as our downtrending example because that's exactly what it is. So again, scroll down to the description and you can see that International Business Machines Corporation provides integrated solutions and services worldwide. Doesn't really tell you that much in that first sentence, but you go on, they're into Internet of Things, cloud services, so on and so forth. So again, come over to macro trends to see the revenues over time. And we're going to focus on this period onward. So from 2011 onward, you can see that revenues were 106 billion, and then now they are 75 billion as of last year. So again, you can see it in the table, but that's just our example of a downtrending company. They're going to have to make some changes to, boost sales again. Now, for the stagnant or flat revenue example, we're going to look at Cisco. Now, Cisco is a tech company. You can see it right here. When you scroll down, you see that it designs, manufactures, and sells internet protocol-based networking and other products related to the communications and information technology industry in these places. Now, when you go over to macro trends, scroll down to the chart, we're going to focus on this period onward. So from 2013 onward, so the last 7 to 8 years, you can see that revenues back here were 47.8 billion, and then now, as far as this past year, in 2020, they were 48.07 billion. So they actually dropped off a little bit, but you can just see how revenues were relatively flat during this time period. Okay, for the cyclical example, I've pulled up Nucor Corporation. Now, I already know this company. I know what they do just because when I first started in the stock market, I naively invested in this business just because I just didn't understand at that time business characteristics and paying attention to revenue trends. But again, the same thing, you can scroll down and see that Nucor Corporation manufactures and sells steel and steel products. So it's a steel company. Now, when you come over to macro trends, you can actually see in a chart how the revenues have gone up and down, up and down, up and down, up and down. It looks like a roller coaster track. And then down here in the table, you can see the same thing, how they've gone up and down, up and down. So this is our cyclical example. Now, for the honorable mention, I pulled up DoorDash. And I pulled it up for a couple different reasons. One is that when I scrolled down to read the description, even though we all know what DoorDash does, I've used it a couple times myself, it doesn't really give you the, a full sense of what the company does down here. So whenever this happens, you can always crack open the company's 10K reports, and I'll go over 10K reports in a later video. Now, with DoorDash, I don't have to, pull up macro trends just because, their financial reporting doesn't go back past 2018 because back here they were private. But the second reason I pulled it up for is because I wanted to show how the revenues have exploded over time, but at the same time that revenues have exploded, the company has stayed unprofitable. So you just can't pay attention to only the revenue trends and how revenues are going upward, because even now I wouldn't invest in DoorDash, even though plenty of people are, but I personally wouldn't invest in it just because looking at the business model, I'm like, okay, sales are exploding, but your expenses are exploding as well. So that's just a bad sign. This is going up, but this is going down. And I think, later on they might be able to cut costs, and they will definitely have to be able to cut costs for longevity reasons. But for right now, it's just not a company that I would invest in. And that's revenue trends. Nah, this gotta be a mistake. They're paying that much for this? They don't even have any revenues. Like, it's a computer company and they haven't sold a single computer. You see some weird things in the stock market, man.